It is Brian S. Arnold here, and this is the Authority Project. And I have my new good friend here, Mark Willis, on the virtual stage with us today. And he's going to show us, he says, he's going to help us fire our banker so we can bank on ourselves. Is that right, Mark?
Yeah, hope your bankers are listening and shaking in their boots because we're about to kick them to the curb.
Awesome. Well, we shall see. We shall see on this amazing episode of the Authority Project.
All right, ladies and gentlemen, boys and girls, feast your eyes and tune your ears. It's that time again. We are live with another episode of the Authority Project. It's the video podcast streamed on Facebook, YouTube, Twitter, and Periscope, where we talk to digital marketers, business coaches, and creators of all kinds on how they've built authority in their field and how you can mimic their success. Developing authority, building your audience, and attracting better clients to your own business. Now, without further ado, let's bring to the virtual stage your host, Brian S. Arnold.
And we are back with another one, folks. It is Brian S. Arnold here, and this is the Authority Project. You are the project. You must slap authority to your name so you can sell more of what you're great at. And I am honored to have Mr. Mark Willis here on the virtual stage. How you doing, my friend?
Oh, doing great, Brian. Thanks so much for having me on.
Awesome. So we're not going to dive right into it first. We want to let the audience know, Mark, first of all, who are you? Who are you personally and then professionally?
Well, I'm a father, a husband, a Christian, a friend, so many things before what we wear for our professional hats. I'm also a certified financial planner and love the opportunity to serve people all across the country in all 50 states and Canada and beyond, really, in helping folks finding some financial solvency, some sanity. Can we even say that word, sanity, in our world today? So much tumult and turbulence and volatility and insanity, whether we're talking on the headlines or in our personal balance statements. There's a lot of insanity in this world, financially speaking and beyond. So it's my honor and privilege to get to work with folks, just regular folks up to very high net worth individuals, and helping them take more control over their future and even write a contract with their future.
Great stuff. So before we dive in even more, one last question that I want to ask you. Mark, what is your daily routine?
Well, hey man, when you got a little kid under 5 years old here at the house, every day is, I was going to say lockdown is something we already knew way before 2020. Let me just tell you, man, we had a lot of fun, but my routine revolves around getting up early, writing down positive affirmations, reading, journaling, getting it done. I try to get more done before 7 a.m. than most people can do in a whole day. That's my goal. And not just productive wise, but like heart wise. I think one of the biggest things we miss in life, if we're not too careful, is just who are we? Who is this creature called us? And if you spend a little time getting to know yourself in the mornings, if you find time for it, or evenings, whenever you've got your most alert brain working, man, it's a powerful tool. It's a powerful gift, this thing called life. So my morning routine consists of getting up, getting some coffee going, getting some journaling, reading scripture, then getting my little girl up and getting the family going, having some fun, working out, usually in the gym, and then trying to hit the ground running, try to beat that sun up,
Yeah, sounds great. Okay, so let's dive into this topic then. How do we fire our banker and bank on ourselves? What is that about?
Well, I'll tell you a quick story. We had someone recently who called me. They said, they were just actually today, called me up, said, Mark, I'm 63 years old. I have nothing left after a divorce and a couple of market crashes, took away my retirement savings, and now I don't know what to do. And she's done all the right things. She's making an okay living. She's living within her means, but she's got some issues like all of us do. Okay. And if you really dig deep underneath, most of us are working hard. but we're swinging a dull axe against a tree. And I'll just say that banks are one of the biggest profiteers off of our backs, and we may not even realize it. So there's a book out there called Debt, the First 5,000 Years. The First 5,000 Years. Brian, that's a great title. It's a scary title, but it's a great title for describing our reality.
Yeah.
We live in a world where banks exist, and there's no getting around that, right? The banking function in humanity has existed as long as art and the wheel. It's about as old of an invention as anything us humans have come up with. 5,000 years of debt. So if we're already in this banking world and we're just living in their world, why not take back the banking function from the banks, take it back into your life, your family's life, and take control of that part of your financial life? As a certified financial planner, it's the small hinge that swings the big door. If I'm fiddling over, whether I can get 11% or 12% on my mutual funds, but I'm losing a third of my life savings to a bank or market volatility, what good did my mutual funds do me if I'm losing? According to the US Commerce Bureau, the average American spends a third, 37% actually, of their net income to service debts. So that's the big problem right there. It's not so much the interest rate. Now, we're all living in very low interest rate environments, but it's the volume that kills us, just like eating. Doesn't matter how fast or slow I eat the food for the most part. It's the volume that's going to take over, impact my waistline, right? It's the volume of food. It's the same with interest. It's not the rate that kills us. It's that volume. I was meeting with a doctor who makes $250,000 a year, doing fine with his income. And he was happy with his 10% a year mutual funds. But we looked at his numbers. We sat down over Zoom, did a full financial consultation, do it totally complimentary for folks all across the country. And I was looking at his financial situation, very happy with his returns in his mutual funds. But he had a house, a second house, a boat, a couple of cars, a student loan on a medical debt, a medical school student loan debt. And all of it totaled 80 grand a year just to service the interest, Brian. So that's a third of his income going to debt. Just for the privilege of being in debt, you got to pay 80 grand a year. So he was spending 30+% of his money to banks, credit cards, finance companies. And he was hoping and praying he could keep getting that 10% a year off a mutual fund. Now, is he moving forward or backward? He's moving backward in his financial life, right? Banks are winning. This is how they win. Okay, I'm off my soapbox.
And they know it too, but it's like this is what we believe from childhood. You set up a savings account, you set up you go to college, and hey, you got your first credit card, your first bank, put your money in the bank, and so forth. So it seems simple enough. This is what everybody does. Everybody, I'm a parent. I say that to my kids. Make sure I say be careful with your first credit card, blah blah blah. That kind of thing. But I always say, go get your bank account and those kind of things. So, what is wrong with that, Mark? What is wrong with that?
What's wrong with that? What's wrong with that? I totally get that. And I love that you're helping your kids think about money and finance, getting them started. And there's nothing wrong with I have a checking account, right? I'm not talking when I'm talking about firing your banker. I'm not talking about the deposit accounts. That's not where banks make their real money. What they're why do they have an all marble lobby worth $500 million in your downtown square, wherever you live? That's not because they're happily opening up a deposit account for a young adult. They're making their profits off the debt. Now, here's my question. Let's say that your kiddo or you or I walk into a bank and we give that wonderful banker 10,000 of our hard-earned dollars, $10,000. How much of that money, $10,000, how much do you think the bank keeps in the vault? Would you be surprised? What do you think? Just give it a guess. What do you think? What percentage? What percentage of our money?
I say 50%. I'll put that
50. Okay, so $5,000 out of 10.
Yeah.
Would you be surprised if I told you it was 10%? 10% of your money is
Not
actually
really.
there.
Not really, no.
And last year with 2020 and coronavirus, they lowered it to, wait for it, 0%.
Mm,
0%. That means you walk into the bank, you hand over 10 grand of your money, and then Brian, I walk in right behind you in line and I ask
yeah.
for a loan for $10,000. They're
Right.
going to hand you or hand me your hard-earned money. They're going
Right.
to pay you, 10 cents per year of interest, and I'm going to get charged 10% or 18 or whatever my number is, right? So that is where banks make their profits. So what can we do about it? What can we
Yes,
do about it?
that's the next question. How do
Yeah.
we begin to start protecting and growing our money? How do we do that?
Yeah. Hey, if you could find a way to get a FDIC insured bank charter, have about $100 million to open up your doors as a bank down the street, Brian, that'd be the best way to go.
Yeah.
But barring that option,
Yes.
um,
Yes.
strangely enough, we can bank at the you and me level and bypass banks, credit cards, finance companies, and become our own banker, bank on ourselves, and use the banking function that seems to be pretty pervasive in human culture anyway. If we're already in the banking business and we're just sitting on the wrong side of the banker's desk,
Yeah.
how do we sit behind the banker's desk? Well, it's a mindset. It's a concept. Thinking like a banker means, we're not afraid to add money to our vaults, not afraid to save money and pack money into the vault, but we're also not afraid to loan it out to ourselves. Now, if you had a bank, would you, if you had an actual bank, Brian, like the ones we know about, would you borrow from any other bank, or would you bank from your own bank? Would you
From my
borrow
own
from your own
bank.
bank? Yeah.
Every day, all day. Yes.
Me too. Yeah. So how do we do it? We got to come down the ladder and have some real tools that help us get there.
Yeah.
As it happens, as I was doing my due diligence, researching as someone just trying to come up with strategies to pay off $120,000 of student loan debt that my wife and I accumulated. This is, back when that was real money in 2008. We, in the middle of the Great Recession, where we had no jobs, right? And we had 6 figures of student loan debt and a pretty massive student loan payment every month. I had to find a way to break free from that mess. And of all things, a high cash value life insurance policy stumbled across my research as a CFP. And dividend paying whole life insurance, we call it bank on yourself type policies, strangely, of all things, allow us to act like a banker to ourselves. And so give me maybe 90 seconds. I'll try to explain this quickly here.
Yeah, go right
But I
ahead.
like to use let's try it. Let's try
Yeah,
it.
let's go.
In 90 seconds, let's see if I can do it. TGIF. Okay. So T, it's tax-free access to the cash for any purpose at any time. You don't have to wait till you're a certain age. You can get the money tax-free with no taxes due at any time if we've designed it correctly. G stands for guaranteed to grow every year. It grows on a guaranteed basis outside of the stock market. There's no markets to take money away from you. There's nobody who's going to sneeze on your stock market portfolio. It's guaranteed to grow for you every single year. Third, it is life insurance. It's insurance. I is for insurance. So we're automatically solving that problem for our families, our beneficiaries, our charities that we care about the most. And then finally, it is our ability to become our own financing. We can become our own source of financing and bank on ourselves. So let's say I've got a need to buy a car, 30 grand for my car, let's say. And let's say I have a choice. I can either borrow from a bank, I can save up money in a savings account, or I can try this bank on yourself thing that we're talking about.
Mm-hmm.
What's the advantage of bank on yourself? Well, if I look at it truthfully, I finance everything I buy. Either I pay interest to a banker, or I pass up interest I could have earned on money if I spend it, right? If I save money in a savings account or money market or brokerage, then I spend that money, it's gone forever.
Mm-hmm.
But also gone is what that money might have grown to had I not bought my car. Does that make sense so far?
Yeah.
Okay.
Yeah.
So with using the policy, I borrow against the policy. and I pay cash for the car. So I don't owe anybody anything. And I'm driving my car around, and my policy continues to grow on the entire 100 grand as if I hadn't touched a dime of the money.
Okay. That
And
sounds
then I pay
great.
myself back.
It sounds great. Let me ask you this, because why does this still seem like such a risk? Why could I've heard of these things here and there. Why aren't everyone else, why isn't everybody doing this? You know,
Yeah.
we are used to keeping money in the bank, Mark. We why change things? Why change what's we feel like, well, it is broken, but when we feel like everything is still fine, we put our bank in, we still, what are those? There are people who are like, you know, my money's in the bank, I'm doing well anyway. Why do this? Why do this? What's the importance of this?
If you're happy where you are, don't move, you know. Can't convince you if you're totally satisfied with 0% interest rates at the bank. Yeah. And overdraft fees, et cetera. Feel free to stay there if you like. But the key here is really the advantage, in my opinion, is it gives us the chance to have some real control over our future. We can literally write a contract with our future. My thought is that most people, when they really stop to think, they're not totally satisfied with where their money is today. At least I wasn't. So yeah, it's not a perfect solution. There's still insurance costs. You got to set up insurance costs on these policies, you know, but we try to cut those costs down by about 70% to cut the commissions down, the insurance costs. And that gives us quite a bit more control over kind of how much liquid money you have available to you. As far as why we might not have heard about it before, Brian, it's a great question. Short answer is, who's going to tell us, right? Wall Street's certainly not going to. What's the old phrase? If you ask a barber if you should grow out your hair,
right,
you can already bet what his answer is going to be, right? So don't ask Wall Street about this. What about the government? Well, this is a tax-free bucket of money. That's a private transaction between you and the insurance company. It's not a 401k or an IRA. So, you know, it's not a government designed retirement account like IRAs, 401ks. In fact, life insurance is so old, it predates the income tax in this country. And it even goes back before the US Constitution. So there's some longevity here and some grandfathering into the US tax code. So, you know, government might not be really excited about you doing this. However, look at some of the public filings of congressmen and women. You'll see that a lot of them have these policies in their net worth. So a lot of interesting stories there, but I don't know the answer as to why, but now you have heard about it, right?
Yes. Yes.
So
our eyes are opening now. So what about the backlash, Mark? The backlash, people's like, you don't pay your taxes. Come on. You're not supposed to, you're not being fair to our country, that kind of thing.
Yeah. Well, hey, I'll tell you, you know, it's, I'm happy. I'm a big believer in being, in paying my citizenship fee every year, my taxes. Yes. And you know, the key here is there's a pre-tax contribution or an after-tax contribution. And the pre-tax contribution is your 401ks, your IRAs, that sort of thing. And the after-tax contribution is your Roth IRAs and your life insurance. So either you're paying your taxes either on the seed or the harvest. And if you're paying your taxes on the harvest, that's going to be your 401ks and your IRAs.
Gotcha.
So you know, I'm paying my taxes right now to fill in those potholes and build those bridges right now in my policy, as opposed to waiting until the future where my harvest then in my policy will be income tax free.
Awesome. So let me ask you this then. So how quickly is this, you know, available to us to actually start?
Well, you know, you can start one of these as early as she can.
Yes.
At age 5. And I'm gonna yeah. Evie, you want to say hi real quick? All right, give him a big wave, then you need to go, okay? Hi. Say hi.
Hi.
All right, why don't you go over there, okay? All right.
Awesome.
As far as how fast we can start or how early we can start? What was your question again? Sorry.
Hold on 1 second. This crazy noise in the background.
Yeah. Okay.
No. Yeah. How quickly are we able to do this?
Well, you know, again, it does take going through a process where we sit down and talk with folks one-on-one first. I don't just, recommend every single person start one of these. And
Yeah.
definitely don't just call up your insurance agent or
Mm,
your Wall Street guy or gal. I mean, guys, there are 400,000 life insurance agents out there, 400,000.
yeah.
And very few of them even understand this concept of bank on yourself. It's kind of like the difference of buying your fruit conventional or organic. If you buy organic, there's been like 30 things that the food has gone through to meet that label. Um, Similarly, you want a bank on yourself professional, to engineer the policy correctly. You can get any kind of whole life insurance or whatever, but I've met a lot of people. One guy in particular, he was putting in 30 grand a year into what he thought was one of these policies. And
Mm,
as we looked into the numbers, it was a taxable, stock market based, expensive insurance product called variable life insurance, which is not
yeah.
recommended for this strategy. And he was locked in for 15 years and he
Ugh,
didn't even know it.
oh my
So
gosh.
don't just work with your guy or gal is the bottom line there. But you can start as early as a couple $100 a month. You could be
Mm,
packing away for your future. Start using this. My wife and I, we started with a couple $100 a month going into our first policies, and we used it in the first year to help with some medical expenses we had. And we ended up using those policies to wipe out all of our student loan debt. Now, isn't
wow.
that cool? We became better than debt free,
Yeah.
because when you pay off all your debts the old fashioned way, you're just back to net zero. You just
Right.
climb your way back up to zero. But when we paid off our last student loan debt, we had an asset to our name, tens of thousands of dollars large in the life insurance policies. It was a great way to just to fight back against those bankers and actually use the banking function in our own life rather than having to rely on somebody else's bank.
Awesome. This is great, man. I'm glad that you're opening our eyes to this. More people need to hear about this, especially the entrepreneurs of the world. So I have. Let me ask you this question: what is your legacy that you want to leave behind when it's all said and done?
Yeah. Well, there's a someone who taught me this little statement, and I kind of like it. And if you're going to write something on your tombstone, I guess you could do worse than this. The words are, "He was getting better at this." I think that'd be a great thing to write on my tombstone.
Nice, very
He was
nice,
getting better at this.
nice.
But also, I'd say, learn to relish and cherish the gift. Uh, this precious life we've all been given, this special moment in the uniqueness of humanity that we all have, to really cherish that, and then to share it too. I think that some of the cherishing is in the sharing,
Yeah,
and I think if we could let that be our legacies, again, we could do a lot worse than that. But I know that we've got a promise that we make to the people and the purposes that we care about the most. I mean, really, guys, if you think about it, if your mission for your business or your charity, if your mission or your ministry, if your purpose dies with you, that's not a very big mission.
yeah,
So how can we multiply the mission to last beyond your breath, beyond your capacity to breathe in and out? And that's, again, life insurance has an incredible way, unless you're a famous artist. I don't know of any other way to automatically become wealthy after you die, except, if you're Picasso, maybe, except to have life insurance. So it's a great way to leave a legacy, on a financial terms. But again, building the people up to prepare them for that money is just as important as building the money up for the people. So don't just prepare the money for the people, prepare the people for the money.
awesome, awesome. I have one last question. You might have already answered it already, but the question I ask all of my guests goes something like this: there are people listening to you now that will be watching you later, or reverse that. There are people watching now will be listening to you later, and maybe they have similar goals, similar interests of helping people with their finances and so forth. Can you tell them in your own words how they can become an authority in this space?
Well, speak from conviction, speak with story, and speak with real tangible results. Everybody can be a thought leader, but who's going to be an action leader? I want to give the emphasis to action. Again, like we were saying earlier, if you're not making mistakes, then you're not making decisions. So get out there and go make some mistakes. You'll build authority over time.
Yeah, great stuff, man. That's awesome. That's awesome. This has been great, Mark. I'm very intrigued by what you're saying here. Very intrigued. So you got me here for sure. So please tell people where they can find you after the show.
Sure. Guys, if you want to get in our orbit, find our podcast. It's Not Your Average Financial Podcast. Or you can go to bit.ly, that's bit.ly/quickBOY. That's bit.ly/quickBOY.
Awesome. Everybody, get a hold of this guy. Change your mentality on these things. There's nothing wrong with change. So this is great. Fire that banker and banking yourself. Love it, man. Do you have any last final words before we get out of here?
Keep up the great work. Everybody, stop what you're doing right now and go give Mr. Brian a 5-star review. He works hard on this show. Show him some love. Go give him that 5-star review.
Thank you. I appreciate it, man. And as I always say, people, remember, build it, share it, and they will come. We'll see you next time. We're out of here. See ya.
And that's a wrap for this episode of The Authority Project. Thanks so much for tuning in. And if you like what you heard, we want to hear from you. Subscribe, rate, and give an honest review. Share and tell your friends so they can hear too. And for even more authority building tactics, be sure to sign up at theauthorityletter.com. Get free weekly content and ongoing digital product giveaways to help you on your entrepreneurial journey. We certainly hope you got a key takeaway or maybe an aha moment from today's broadcast. Just remember, it's your authority. Build it, share it, and they will come. Until next time.